They're small, under the radar, and often overlooked by Wall Street. Yet these AI penny stocks could deliver returns that blow the giants out of the water. With market caps under $2 billion, they carry risk, but also the kind of potential that built fortunes during past tech revolutions. The strategy behind the selection: this list didn't come together overnight. It started with a deep dive into over 60 AI-related companies pulled from updated research and data. Then came a critical step filtering by market capitalization. Stock price is irrelevant when it comes to penny stocks. What matters is size. A true penny stock isn't one trading at $2 or $5 per share. It's a company with a market cap under $1 or $2 billion. That's where the 10x and 20x returns come from. Next, the valuation layer. Price-to-sales ratio is one of the most telling metrics when analyzing growth stocks. It shows how much investors are willing to pay for every $1 of a company's revenue. Combine that with forecasted growth, and you get a much clearer picture of a stock's true value. This adjusted valuation model reveals companies that might look pricey at first glance, but are growing fast enough to justify or even outpace their current price tag. Recursion Pharmaceuticals, RXRX. Recursion Pharmaceuticals, trading under ticker ERXRX, stands out as a high-stakes AI biotech play. While the stock is currently down about 25% over the last 12 months, it hasn't shaken off Nvidia's confidence. Nvidia owns 7.7 million shares valued at nearly $39 million. That's not a casual investment. What makes Recursion compelling isn't what's already happened, it's what might come next. The company is working on transforming drug discovery using AI models that can rapidly screen out compounds that are likely to fail, allowing researchers to focus their efforts and money on potential winners. With partnerships in place with Roche and Bayer, and 6 drugs in its pipeline, 4 of which are already in phase 1 or 2 trials, this startup has real momentum. Revenue is forecasted to grow 20% this year and another 50% next year. Yes, it's still unprofitable. Yes, cash flow looks rough. But at a 1.29x adjusted price-to-sales valuation, it has the kind of long-term potential that biotech investors look for, especially with Big Pharma facing a nearly $200 billion patent cliff in the coming years. BigBear.ai Holdings, BBAI. BigBear.ai Holdings has quietly been building one of the most essential services in AI data management and decision support. With a market cap that grew from $400 million to $1.4 billion, it's returned 230% and still fits squarely in the penny stock category. The company's technology helps organizations take raw data and convert it into insights. That's foundational in AI development. Its customer base continues to expand, with a $26 million revenue backlog and contracts like a $32 million deal with the U.S. Army and exclusive agreements with L3Harris. Growth has moderated to 6% expected this year and a rebound to 12% next year, but its track record suggests those projections might be conservative. One Stop Systems, OSS. At just $84 million in market cap, One Stop Systems fits the penny stock definition perfectly. First highlighted at $2.60 per share, OSS has a unique advantage. It designs rugged portable computing systems for the U.S. military. This isn't a flashy consumer tech company. It's a precision-focused, defense-aligned firm making AI-powered systems that work in the field. Defense spending on AI is ramping up fast, and OSS has signed 3 major contracts with the U.S. military worth nearly $8 million combined. It's also secured a multi-year deal expected to generate up to $3.5 million over the next 3 years. Sales have grown at a 21% annualized pace over the past 5 years, and while expected sales growth is a modest 7.7% this year, its price-to-sales ratio of 1.6x adjusted makes it one of the top 5 AI penny stocks on valuation alone. Knightscope, KSCP. Knightscope is trying to automate public safety through robotics and AI, taking on the massive $230 billion private security industry. With a market cap of only $37 million and shares trading just above $5, it's a moonshot, but one with a bold vision. The company has developed autonomous security robots that can patrol areas, detect incidents, and report them in real time. Its technology could replace traditional security guards in many locations. Knightscope's revenue last year was only $10 million, but forecasts show 14% growth for the coming year. It's still burning through $20 million annually, yet continues to secure debt financing to keep operations going. GuardForce AI, GFAI. GuardForce AI is the second smallest company on the list with just a $24 million market cap. It provides cash management and security solutions across Southeast Asia and is expanding into Western markets with clients like FedEx and Starbucks. The company is looking to integrate AI into its IoT offerings, particularly for retail. Still, it carries significant risk. With just one analyst tracking it and the lowest forecasted growth in the group, investors need to be cautious. The low valuation makes it cheap, but also reflects market skepticism. While it could yield huge returns if growth materializes, the lack of proven expansion in AI makes it a high-risk, speculative play. Duos Technologies Group, DUT. Duos Technologies uses AI to inspect railcars in motion with ultra-high-resolution imaging. Its railcar inspection portal has over 40 use cases and claims a 95% reliability rate, which is key in preventing costly derailments. The company has already climbed from a $28 million valuation to $87 million, but still offers small cap potential. Only 2 analysts currently cover the stock, but they're forecasting 286% revenue growth driven by safety mandates and potential expansion into trucking and aviation. Given its high utility and potential demand from national transportation policies like the Railway Safety Act, this company could see explosive growth over the next 12 months. OnTrack Inc. OTRK. Sitting at the bottom of the list in terms of size, OnTrack Inc. has a market cap of just $5.5 million. It's tiny, and frankly, it's risky. But it also has one of the highest forecasted growth rates at 47% and trades at a valuation even lower than Supermicrocomputer. OnTrack is building an AI platform to help solve one of the biggest issues in American healthcare: mental illness. With 60 million people affected and half of them going untreated, the opportunity is massive. OnTrack already serves 70,000 members across 33 states and claims it improves symptoms in 6 out of 10 patients within 6 months. Revenue last year was $11 million, but the addressable market is nearly $97 billion. Cash is tight, and the company's future is anything but guaranteed. Still, with a proven service, a wide customer base, and one of the lowest valuations in AI, it might just be the highest risk, highest reward play on the list. The hidden risks in smart strategy. AI penny stocks aren't for the faint of heart. Many of these companies are unprofitable. Some are barely staying afloat. Several, like OnTrack and GuardForce, are skating on thin ice when it comes to cash flow. That's why smart investors treat these like venture capital opportunities. This approach isn't about putting your life savings into one moonshot. It's about allocating 10 to 15% of total wealth into a basket of these opportunities, never more than 2% in any single stock. Because yes, some will fail, but when 1 or 2 pull off a 10x or 20x return, that can lift the entire portfolio by 20 to 40% overall. It's a long-term game. Many of these names will move in fits and starts exploding on news of a new contract, regulatory approval, or tech breakthrough. That's where the real potential lies. Each of these stocks here brings something different to the AI revolution. Some, like Recursion, are reshaping drug discovery. Others, like Duos and OSS, are building the tech backbone for defense and infrastructure. And then there are the wild cards like OnTrack and Knightscope, who could redefine entire industries if their vision holds up. Not every pick will win, but within this collection lies the possibility of generational wealth. Small-cap AI names are where today's innovation becomes tomorrow's empire. So what do you think? Are these AI penny stocks worth the risk? Let us know your thoughts in the comments. Subscribe and hit the bell to stay updated with the next big opportunity before Wall Street catches on. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice or investment recommendations. The views expressed are based on publicly available data and current market analysis at the time of creation. Always consult with a licensed financial advisor before making any investment decisions. We are not responsible for any financial losses or decisions made based on the content in this video.